Why are stock markets rising even when you feel like everything is getting more expensive? Why does Wall Street keep moving global markets even if you don't live in the USA? It's a question a lot of people are asking. Right now, global markets are gaining serious momentum, and it's all being led by Wall Street. But this isn't just a story for bankers and traders. This momentum affects your savings, your job security, your business, and even the price you pay at the store. So, stick with me. In the next 10 minutes, I'm going to break down what's really happening in global markets, why Wall Street matters to absolutely everyone, and what all this momentum means for ordinary people like you and me. So, what does global market momentum actually mean? Think of it like a wave. Market momentum means there's strong buying activity pushing markets higher and higher. It's a powerful force. When people say global markets have momentum, it usually means a few things are happening at once. First, stock markets around the world are rising together. Second, investor confidence is improving, so people feel better about putting their money to work. And third, money is flowing into what we call risk assets, like stocks. And why does Wall Street lead this whole movement? Well, the United States has the world's largest stock market, by far. On top of that, the US dollar is the global reserve currency, meaning it's used in international trade all over the world. Plus, most major US companies, from Apple to Coca-Cola, operate globally. So when Wall Street moves, the world really does follow. So, what's driving Wall Street right now? What's behind this powerful upward push? There are four main factors. First, and this is a big one, is the expectation of interest rate cuts. Investors strongly believe that central banks, especially the US Federal Reserve, are getting ready to lower interest rates. Lower rates are like fuel for the stock market. They make it cheaper for companies to borrow money, which can lead to higher corporate profits. It also makes investing in stocks more attractive compared to safer options like savings accounts. The second driver is strong corporate earnings. Despite all the talk of a slowdown, many big companies are still making record profits. We're seeing this especially in key sectors like technology, companies involved in AI and semiconductors, and even in energy and healthcare. When big companies make a lot of money, their stock prices tend to go up, and that lifts the entire market. Third is the AI and technology boom. This isn't just a buzzword, it's a revolution. Artificial intelligence is driving massive investment across the board. Companies that make AI chips, provide cloud computing services, or develop automation software are seeing their stock values soar. This incredible growth is creating a huge wave of optimism that ain't pulling the rest of the market higher with it. And finally, the fourth driver is the surprisingly resilient US economy. Despite high inflation over the past few years, the US economy remains strong. Unemployment is still very low, which means people have jobs and money to spend. Consumer spending continues to hold up, and businesses are still expanding and investing for the future. This underlying economic strength provides a solid foundation for market confidence. So how are other global markets responding to this Wall Street momentum? Let's take a look around the world. In Europe, markets are generally following Wall Street's lead. This is because many European economies are heavily dependent on exports, a lot of which go to the US. Their banking and financial systems are also deeply connected, and investors on both sides of the Atlantic often share the same sentiment. Over in Asia, the picture is a bit more mixed. Japan's market, for instance, is benefiting from a weaker yen, which makes its exports cheaper and more competitive. China, on the other hand, is facing challenges from a slower than expected economic recovery. And then you have a market like India, which is seeing strong long-term investment inflows from investors who are bullish on its growth story. What about emerging markets? These are the developing economies in places like Latin America, Africa, and Southeast Asia. They tend to benefit when global momentum is strong. A weaker US dollar, which often happens when markets are optimistic, helps them a lot. It also encourages capital to flow into these higher growth regions. However, it is important to remember that these markets remain vulnerable to sudden shocks and can be the first to suffer if sentiment turns negative. Now let's talk about currencies, commodities, and bonds, because they're all part of this story. When stock markets rise with confidence, the US dollar sometimes weakens a little. This is good for US exporters, and it's also a big help for those emerging markets we just talked about. What about gold and oil? Gold often rises when there's still some underlying uncertainty in the world, acting as a safe haven for investors. Oil prices are a different beast. They directly affect inflation and transportation costs for everyone, so we always have to keep an eye on them. And then there are the bond markets. This is the quiet market that many people ignore, but it guides global money flows. Right now, we're seeing bond yields fall. This is a signal that investors expect slower inflation ahead and potential interest rate cuts from central banks. All these markets are interconnected, and they all tell a piece of the global economic story. Okay, so what does all of this mean for ordinary people? You don't need to own a single stock to feel the impact of this global momentum. Let's start with jobs and wages. When markets are strong and companies are confident, they are more likely to hire more people. They also invest in expansion, building new factories or opening new offices, which creates even more jobs. Over time, this can lead to wage increases as companies compete for workers. What about loans and mortgages? The expectation of lower interest rates is huge here. It can directly lead to reduced costs for car loans, business loans, and especially mortgages. This helps support the housing market and makes it more affordable for people to buy a home. And what about the cost of living? This is a tricky one. Market optimism can help stabilize prices, but it's not a magic wand. Energy and food costs are still influenced by other factors, like geopolitics and weather, and inflation doesn't just disappear overnight. So while the trend is positive, your grocery bill might not reflect it right away. From a factory worker in Bangladesh to a software engineer in Europe to a small business owner in the USA, what happens on Wall Street affects everyone's economic reality. Now, it's crucial to understand that momentum does not mean safety. There are always risks you should know about. The first key risk is inflation making a comeback. If prices start rising sharply again, central banks might have to reverse course and keep interest rates high, which would be terrible for the stock market. Another major risk is geopolitical conflict. A major war or trade dispute can shatter investor confidence in an instant. We also have to consider the risk of overvalued tech stocks. A lot of the current momentum is driven by a handful of giant AI and tech companies. If their growth story falters, they could drag the entire market down with them. And finally, there's the risk that central banks simply delay the rate cuts everyone is expecting. Markets can change direction very, very fast. So, what could happen next? The next few months are critical. If inflation continues to cool down and central banks finally begin to cut interest rates, markets may continue their upward climb. Emerging markets could see a significant boost in this scenario. However, if inflation rears its ugly head again, or if another shock hits the system, markets could fall sharply. The optimism we're seeing now could evaporate quickly. The bottom line is this: global markets and the momentum coming from Wall Street shape the modern world economy. Understanding this complex machine isn't just for experts. It helps you make smarter financial decisions, protect your income and savings, and see beyond the daily headlines. It empowers you to understand the forces shaping your life. So now I want to hear from you. What's your opinion on all this? Are the markets being too optimistic, or is this really the beginning of a new growth cycle? Let me know your thoughts in the comments below. And if you found this explanation helpful, please give this video a like, share it with someone who might need it, and subscribe for more simple explanations of global money and markets. Thanks for watching.